All right, we're just getting set up here, and welcome everybody to this presentation, which we're going with the title Working Capital Solutions for NPN and Real Estate Investors. I'm really happy to have a couple of folks on here who are experts in this, and this is probably among the top three, if not, the top requests that I get is people say, they're looking to get started and they're looking for funding, and it can be a challenge, especially when you're talking about distressed assets and they need to close quickly. And a lot of times lenders don't really understand the collateral and all that. And so what we're hoping we can do today is, or what we're going to do is we're going to lay out some other options for you so that you can get your deals done. And so with that, if you take us to the next slide there, Kurt, I just want to introduce our speakers who we're going to have here today. It's going to be Kurt Netterveld and Tony Walker. Tony, I met several years ago, right sort of just after things really got pretty dicey out there. Tony, welcome. You want to tell them a little bit about your background and who you are and why you're here?
Yes, absolutely. Thanks, Brett. Pleasure to be on the call, on the webinar. Yeah, we met a few years ago. I'd say probably 5, 6, 7 years ago, and we had a company at that time called Off Market Assets, and we actually created that buzzword that you see out there nowadays. Back then, most people didn't know what off market meant. And so what we did is we sourced non-performing notes and REO properties from banks directly. Unfortunately, we were not equipped with all the information that Distress Pro provides nowadays, and so it was quite difficult to put deals together because we played an intermediary role, and we built relationships face to face with the community banks or regional banks to discuss what loans they wanted to get off their books. And then once we found them, we would match them with a pool of investors that we had, mostly hedge funds, and it was quite often difficult to get them to pull the trigger. If we would have had this alternative lending where we could have actually sourced those notes ourselves, got the lending and financing, and do the deals on our own, we would have been in a much better spot. But that's how Brett and I met. And then I'm with Rainstar Capital Group now with Kurt. And I've been in the alternative lending and funding and financing space for about 15 years, building business credit and working capital loans, and just basically finding solutions for business owners that need funding. And that's why I believe that working with Brett and Distress Pro is going to be a great marriage because I think we both bring to the table what each other needed in the past. So
awesome.
That's all I got to say.
Cool. We're happy to have you on board. Kurt?
Yeah, thank you.
Kurt is a CEO of Rainstar Group. He's going to walk us through a handful of programs today. Started Rainstar Marketing back in 2010 and then built a huge network of lenders who offer all kinds of different products. Let's see, we've got the Ultimate Commercial Finance Capital Network, and he's running this out of the Grand Rapids, Michigan. And Kurt, tell us a little bit about who you are and why you're here.
Yeah, absolutely, Brett. It's nice to speak with you and appreciate the opportunity to speak with your audience. So the Distress Pro platform we have a very good knowledge of. We actually were clients of Brett a couple of years back when we were running a subsidiary fund called DebtStar Capital, which was a private mortgage investment fund. So for everyone listening to this call, not only do I come to the table with a lot of different experience in the different capital markets and investing into distressed assets, but I can say that Distress Pro was a great platform for us when we were using it to be able to source the distressed mortgage notes that we were acquiring up here in Michigan. So my background, what Brett was saying, I launched a marketing firm called Rainstar Marketing about 7 years ago. Since our launch, we've served over 100 clients that have been primarily fund managers and direct lenders in the commercial real estate and the corporate finance arenas. And about 3 years ago, in January of 2014, I made the decision to become a principal in the transactions. And so I launched Rainstar Capital Group. We've invested from our balance sheet into the distressed debt space. Like I mentioned, we ran a subsidiary fund called DebtStar Capital, which acquired portfolios of distressed mortgages and bulk REO packages up here in the Michigan market. We made the decision to back out of that space going into this year. Pricing and inventory had changed, obviously. So currently where we invest is we primarily acquire portfolios of distressed consumer and business debt from FinTech lenders, the online lenders. And so along with our direct investments, we also run a very robust debt advisory platform. We have a team currently of 25 managing directors spread out across different marketplaces, across the U.S. All of our directors typically have 20 to 30 plus years of experience, either in banking, private equity, commercial real estate, or merger acquisition financing. And obviously we're very pleased to have Tony on the team. Tony is a great guy. He does a fantastic job for our clients. And so a lot of the relationships, Brett, that the marketing firm built over the last 7 years are the same lenders that we work with today in providing our clients capital. And what's been unique about what we've been able to build is there's lots of different groups out there, shops that will just provide commercial real estate financing or just do business financing. We've been able to bring it all under one roof. And so we currently provide to clients commercial real estate, corporate finance, small business, and equipment financing. And our clients really appreciate the breadth of the platform that we have. We're going to go into that in a little bit, but we have 200 plus lenders on our platform. They're all specialty finance firms, hedge funds, banks, and PE funds. And the benefit to the client then is if they've been rejected by their local bank in securing financing, we have the platform of all the alternative lenders that will help them to grow their business. So anyway, really appreciate the opportunity, Brett, for us to speak and go through these programs today. It's what we found is when non-performing note investors learn about these programs and real estate investors learn about these programs, they get very excited because capital is such a huge need. I'm sure, as you've obviously seen, Brett, with running Distress Pro.
Yeah, it really is. And I have to say that one of the reasons why I reached out to you initially about this was because hearing so much from my audience and subscribers and members and about their quest for funding, we started on our side to go out and to look for individual lenders, and that's what we found was a lot of individual lenders, and that's one of the things that I liked so much about what you were able to show me. It was the breadth, right? So there. Maybe you think that you're after one type of funding, but you discover it's not going to work. Well, there's other options available right there. You're not going back to the drawing board. And so that's really why I reached out to you and asked if we could do this and bring this, together for the members so that just to really cut out a lot of that sort of the footwork and all the other stuff that goes along with having to go find debt to do your business.
Yeah, absolutely. That's a question that we always, get asked all the time. Do you lend from your balance sheet? Is Rainstar Capital Group going to be the lender that's going to hold the paper? Mm-hmm. And the answer is no. We made the strategic decision, I think very similarly to a lot of folks probably listening to this webinar, to invest our internal capital into distressed debt. Mm-hmm. The reason we do that is because the return on investment is much, much stronger than if we were to lend out our money at 8%, 10%, 12%. Right. Again, nothing wrong with lending capital. That's a great business model. But with being able to work kind of on both sides of the bank, we made the strategic decision to be able to invest internal capital into the back side and into the distressed side. And then we put together this this lending platform to be able to provide those solutions to clients. And so one of the things that I think most of the real estate investors and most of the non-performing note investors on this call will care about is the ability to help them structure transactions and structure capital to meet the need of the specific deal. And the problem that you have like you were mentioning, Brett, when you work with just an individual lender, is they have their box, right? They have their window, and if you don't meet that, then you're kind of out of luck. What we've been able to do is bring all the boxes under one roof, under one platform, and it's great. I kind of joke that we play by rules, but we also don't have rules because we're not limited just to providing our clients one program. We have a lot of different programs, and then that's where it kind of gets it gets fun.
Yeah. So today we're going to go through 5 of those programs. All right. Actually, it's a little more. Maybe it's 6, but it's 5 different ways, 5 different types of funding that you can get for your deals. Right.
Yeah, absolutely. And so, just kind of set the agenda for this, for this call. We're going to go through. If you kind of look at some of the subject points. We're going to start the conversation with, why it's important for all non-performing note investors and real estate investors to add these non-bank financing products to their business here in 2017 and how that then will help them grow. Second, we're going to go through, what is it that NPN and real estate investors need working capital for? What are the uses of those funds? Third, we're going to do an analysis on how the investors can get approved with the lenders, right? And obviously, most lenders care about the 3 C's, right? Cash flow, credit, and collateral. So we're going to spend some time talking about that. Fourth, we're going to go into our lender platform, how to instantly access the Rolodex and the platform of our 200 plus lenders that we've assembled. And then fifth, like you mentioned, we're going to go through the 5 product types that are in demand now for non-performing note and real estate investors, what those looks like, what the characteristics of them are, and most important, we're going to talk about how you use those programs to be able to help grow your business. So before we transition, I want to make sure everyone on this call obviously understands just the disclaimer. Please understand if you need any sort of legal or accounting advice, please go to get that. You should always consult with your legal or tax professionals before making any sort of decision on securing financing, whether it be through us or any other third party. So we want to make sure we put that disclaimer out there.
Sure.
So cool. So let's jump into it. So for most folks on this call, I think they're going to understand that obviously dealing with banks is difficult, right? Banks are very strict and conservative with the lending that they do, right? And obviously your audience, Brett, knows this incredibly well because fact is when problems occur, the bank has distressed assets, right? And that's where our investment firm, and I know a lot of whether it be an individual investor listening to this call or a fund or anybody that's playing in the distressed debt space, we're here to take advantage of those problems, right? That the bank has. But think about it then. On the front side, on the lending and the origination side, these banks are trying to be very careful so that they don't have defaulted assets, right? And so, banks typically on the business financing side, they're not going to lend to you if you don't meet the following categories. Typically, they want to see, your business, your LLC, your S Corp, your C Corp, being in business at least 2+ years. They have specific revenue requirements, right? Credit-wise, of course, all banks, they don't want to deal with folks that have 400 or 500 or maybe even low 600 credit scores. They really want to see folks that have those high 700s, right? And then the fourth thing they're going to look at, of course, is the collateral position, right? So the major question becomes, if you had a hard time, right? If you went through a divorce, if, like for me, obviously, Brett, my health history, I was diagnosed with cancer about 6 years ago, and that was a tough time. Obviously, I was able to make it through it and bounce back, but life happens, and sometimes when those hard times occur, they can affect your personal financial situation, whether that be a bankruptcy, whether it be a foreclosure, whether that 700 credit score that you used to have gets shot because your business your business revenues declined or whatever it may be. Life can happen. And so does that mean, though, as you are looking to continue to grow your business, that you should be hindered? Well, no. I mean, obviously you can put some plans in place to either get your revenues up or get credit restoration. But the reason then that non-bank lenders are here is they cover the gaps that most banks won't help you with, right? And so who are those non-bank lenders? They typically are private equity firms, hedge funds, specialty finance firms, and then fintech lenders. FinTech is obviously newer. For those of you that maybe haven't heard that term before, FinTech is just combining, financing with technology, right? Think of FinTech lenders as like online lenders. The easiest example I give is if anybody has seen on TV, Quicken Loans marketing their Rocket Mortgage, click a button, get a mortgage.
Yeah.
That's an example of FinTech, right? Lenders are leveraging technology to be able to quickly and efficiently get capital into the hands of their borrowers. And there's lots of different fintech lenders. There's fintech lenders for student loans, for for personal loans, for residential mortgages, for commercial mortgages, and then also for business loans. Here at Rainstar, we really have picked up on the fact that fintech is completely where it's at. Most business owners, in our experience, and real estate investors as well, they want their capital, yesterday, right? They don't want their capital in 30 days, 60 days. And obviously some programs require that. But the ability to get kind of what we call fast cash is very important, especially if you have to buy inventory, if you have to meet payroll, or obviously in our space, Brett, buying an asset. I'm sure you've probably gotten some calls, right, of folks that are like, oh, I got this great deal. I've been negotiating with a bank. They're willing to sell me this pool of distressed residential mortgages. Brett, can you help me? It's such a great deal. I need help. And if you don't have the ability to access that fast cash, you miss out.
Right.
You see that probably all the time, right, Brett?
Yeah, and mostly the solution is, well, you need to find an equity investor, to do this with you most of the time. And so I'm hoping what we can discover today is that there are some other options for them.
Yep. Yeah, absolutely. And obviously, I think you just hit on a really good, important point. When folks look to access capital, right, capital obviously comes in two forms, right? It comes as either debt or it comes as equity. And, being in private equity, obviously having, private equity partners, joint venture partners is great, right? However, sometimes, when you run the analysis, even if you were paying, 10%, 12%, 15%, whatever you're paying on the capital on the debt side, sometimes that means that you're actually putting more money in your pocket compared to doing a 50-50 split through like a joint venture. Mm-hmm. Sure you've seen that, right, Brett?
Yeah, all the time. The other thing is that a lot of folks who are just looking to get started, they don't really have maybe necessarily a track record yet. Maybe they want to, kind of get their feet wet. And there's a lot of little, guys out there where you could buy, maybe it's a non-performing junior lien. You're buying it for a few cents on the dollar, but you don't want to. You want to keep your cash, where it is. And I feel like some of the things we're going to walk through today would be, nobody was going to come invest a few $1,000s with you, right? I mean, to do a deal like that. A much better solution would be, if you don't have your own cash, is to have a little debt that you can use for short term on something like that. So I think there's sort of a lot of different edge cases, and maybe we can get into some of those as we go through.
Yeah, absolutely. And, Tony, if you want to maybe jump in with your history of the off-market assets, obviously and we see this too here each and every day with Rainstar, a lot of folks, they'd love to have a line of credit, right? Mm-hmm. Having kind of what we call that on-call capital is huge, right? I mean, Tony, if you want to jump in a minute, I mean, you can speak to obviously all the time it takes to negotiate with the banks, right? And if you had a line of credit, or if you had, some working capital available, that would have made your job a lot easier, right, Tony, when you were going out and you and your clients were acquiring those assets back in the day?
Yeah, absolutely. Even, before when I was with off-market assets, I was connected with a couple of investors that did short sales. And, we always needed cash flow for marketing, earnest money deposit, what have you, just to keep your business going, while you're waiting on these deals to connect. So yeah, to have that on-call cash, like you mentioned, is very important and much needed. Absolutely.
Yep, absolutely. So then let's jump in. Let's talk a little bit about why do NPN and real estate investors need capital, and then what do they use it for, right? If you look at what we need that liquid cash for, it typically kind of falls into one of these 6 different things. First of all, obviously we need cash to purchase the notes of the property, right? Of course, to be in this business, to grow your portfolio, you have to have capital to buy that asset, right? Whether it be the physical property or the paper, right? Or the note. And so, if you have the ability to have that cash available, again, it makes it easier when you get into the negotiation process with the loss mitigation manager or the loan workout specialist at the bank, because then you can actually show them a proof of funds showing them that you have the cash sitting there, right? Second thing that we need cash for, right? Obviously down payment money, right? So let's say you brought a private lender in, or you had somebody that was going to put up the senior debt position, but they wanted you to put what most folks on this call know as the skin in the game, right? Mm-hmm. Well, if you don't have that, cash sitting in the game, or excuse me, the cash sitting in your account, but you had a line of credit, or you had this on-call capital that you could then transfer the cash into your account, that's going to make a world of difference for you, because then you can acquire the senior debt. But obviously, if you don't have the down payment money, acquiring the senior piece of it becomes a little difficult, right? Third thing, closing costs, right? Obviously, everyone knows, there's costs associated with your attorneys, your legal team, with the title company. Lots, if there was a broker involved that you have to pay a commission to because they brought you that portfolio, you have to have sometimes closing costs have to come out of your pocket that you have to be able to have available to you to be able to get those deals done.
Sure.
Right?
BPOs, winterizations, I mean, the list goes on of the little sort of, things that come up along the way.
Exactly. Yep. And so then obviously number 4, after you've acquired the asset, of course, if you're buying if you've taken back the property through a foreclosure, through a deed in lieu, or cash for keys, obviously everybody knows if they've bought and taken back properties, sometimes you have to rehab those properties, right? The homeowner wasn't always the most, friendly to the property, if you know what I mean. So I've walked through many a drug home, in the day of us buying, assets and such. So obviously rehab supplies are huge, right? When you run down to Menards, Home Depot, Lowe's, or wherever you go to buy your rehab supplies, having that working capital available to be able to quickly, get the cosmetics done, or buy a new furnace or refrigerator or whatever it may be, so you can get it back on the market and get it liquidated, or get it back to the status of being able to rent the property back out and get that cash flow coming in from it is huge, right? And I've seen many a client over the years that have kind of what I call stalled projects, where they bought this pool, they bought this portfolio, they have these homes sitting there, but they're limited and they can't get them turned around as fast as they want. Why? Because of capital. Their capital's tied up. They have to wait for the one home to sell so that they can get the capital freed up to be able to, take that and then go and get the second house rehab. So again, having access to these working capital programs, I've always just taught capital is like having tools in your tool belt, right? Every deal that you encounter needs a different type of tool, and so by having these different tools in your tool belt, it's going to help you become more successful. So going on here, legal costs obviously we kind of hit on, and then number 6, obviously, if there's no cash flow coming in, there are going to be costs that you have to pay to your loan servicer, right? And so you need to be able to kind of have that gap, that gap funding. So transitioning now, let's talk a little bit about, what do lenders care about, right? Obviously, as we've talked about earlier, banks are very strict in what it is that they lend on, and non-bank lenders, there's a couple key things that, everybody listening to this call should be aware of. First of all, a non-bank lender still is going to look at the cash flow, credit, and collateral as a bank would. However, the important thing to understand is that a non-bank lender is going to have less lending restrictions, okay? And we want to kind of use that to play that to our advantage, to be able to understand and understand what it is that lender is looking for, and then to be able to access their capital to be able to, accomplish our goals. So the thing that I want everybody to understand in our world, in the alternative lending space, all of our lenders, when we bring a new lender onto our platform, one of the first things that we ask them is, tell us about your underwriting, right? Tell us about your loan programs and what your chief credit officer really cares about. And they'll typically, of course, touch on cash flow, credit, collateral. The fourth C, obviously, is character, right? They want to know that the borrowers that they're bringing into their portfolio are reputable. But normally what happens is they typically will prioritize one of the items, cash flow, credit, or collateral, over the other. And so the key then is, and this is where Rainstar Capital Group really helps our borrowers. We help our borrowers to really understand and identify which of the ones the lender focuses on, right? And this is so important because we teach that financing is just like putting a puzzle together, right? You're going to come to the table with a credit score, cash flow, assets, all the different types of things. And then it's our responsibility to do a full analysis with you, go through what we call the debt discovery process. And from there, then to be able to match you up so that your pieces of the puzzle fit with what it is that our lenders are looking for. And once that happens, then it can become, a great marriage, and everybody can get the deal done, and everybody can move forward. So transitioning now then into our platform. So again, our platform is built off of all the alternative lenders. Our platform does not, first of all, it doesn't have like high net worth guys or kind of what we call affinity investors, right? Private one-on-one investors. All of our platform is comprised of companies, right? Branded entities that have capital under management, whether they be institutionally backed, whether they've raised capital from the high net worth and the private accredited investors. But all of the lending companies that we have on our program or on our platform aren't individuals. They're all heavy hitter groups that sometimes have 20, 50, $100 million plus of capital under management. And so typically the profile then of these lenders are either going to be banks. We do have some banks on our platform. Second, we have hedge funds. Third is private equity firms. Fourth, we are very active in equipment financing. So we have equipment finance companies. Fifth is specialty finance firms. Pension funds we have on our platform. They typically like your Class A commercial real estate buildings. We also have agency lenders, insurance companies, and then of course we have your different bridge lenders. And as I mentioned earlier in the conversation, we have all the FinTech lenders that provide capital for businesses and real estate investors. And again, I just want to highlight kind of the FinTech lending. And how, if anyone's listening to this, to this presentation, if you haven't learned about FinTech, I would really encourage you to learn about it because it's just such a crucial component to your capital arsenal. And I'm sure, obviously, Brett, you've been starting to see how FinTech has been taking over, right?
Oh, for sure.
Absolutely. So let's transition now into, as Brett had mentioned, the 5 different types of programs. Okay. So again, for everyone listening to this call, I've been in your shoes, right? Running a fund and buying out portfolios of distressed notes and assets. So now that we, obviously originate and provide financing to clients, these programs are the programs that are available on the marketplace. Okay. And so the first one obviously is, purchase financing for single family residential and fix and flip deals. Okay. We can come in, provide the senior debt. We also have programs available for the rehab side of it. One of the things, Brett, I know you and I had talked about before doing this presentation, we get requests all the time for clients that want to go and buy the one-off non-performing note tied to a residential property, and they want to know, does Rainstar Capital Group have lenders that will lend for the acquisition of that note? Okay. Mm-hmm. From our knowledge and expertise in the space, there's only a few groups that do that. It's not very widespread. And the reason for that is because of the fact that it's pretty risky. You know what I mean? There's a fair amount of risk involved with that lender lending on the non-performing note, because obviously then they have to wait for you to do the workout on it. And so we don't currently provide purchase capital for the purchase of a residential non-performing note. We do have it for commercial. That's actually going to be one of the slides coming up. We're going to talk about that in a minute. But for everyone watching this, I just want to make sure that everyone's clear. We don't have a program where one of our lenders will lend at 70% of the purchase price of a note. What we're going to show you though today through some of the next couple slides, the programs, we're going to show you how you can use some of these alternative programs to accomplish what you want to accomplish, which is having cash in your account to be able to acquire that asset. So I want to kind of throw that out there. We do have programs available for the purchase of rental properties, single family homes, and fix and flip deals. But Brett, as you and I had talked about, there's again not a lot of fund managers and lenders that want to sit and extend capital on residential, one-off residential mortgages.
Right. I think the idea is to get the line or to get the capital and then use it to do your business. And if you're part of but you're not out there specifically getting a loan that's going to be backed by your note acquisition.
Yeah, and there's plenty, I'm sure, as you know, plenty of very credible experts and quote unquote gurus who will teach you how to raise capital to buy residential notes or portfolios. And again, from what we see just with our work in the institutional and the capital markets, that gap from a financing perspective typically is coming from the high net worth individuals, the infinity investors, the family, friends, those profile of lenders.
So okay. I'm looking at this slide here right now, and I think I see that you're only looking at credit scores in like the 600 range. Is that true?
Yeah, well, no, yes and no. So these two ads that you see here, these are just a couple of our programs. I really encourage everybody to kind of reach out after we're done talking. Brett has a great link that we've all put together, Distress Pro and Rainstar Capital Group. What we're going to do is through that link at the end of this presentation, we have given to Brett all of our marketing brochures on all of these different programs, okay? And so we have other programs on here that, these are just two of our ads that you see here. We have programs that don't do credit checks. For the for purchase financing for single family and fix and flip deals. We also have lenders that will also do no tax return checks. There's a lot of really interesting programs available for the purpose of purchase financing. And I really encourage everybody. What you're going to see here as I go through these slides is kind of what I call a very general overview. Everyone that's in the capital markets that knows financing, of course, you have to do a deep dive into the underwriting guidelines and the matrices that each of these lenders has. And so again, at the end of this presentation, I really encourage you to reach out to Brett. We've compiled all the brochures and all the products that you're going to see here. And through that link, Brett, I think you have it set up probably on an autoresponder so that they can just quickly and easily access those programs. And then once you've read about the programs, of course, I'll encourage you to reach out to Tony Walker. Tony is going to really be able to help each one of the listeners today on going through kind of what we call the consultative approach of really looking at your business and identifying which of our programs are going to be a good fit for you. So yeah, so let's continue on here onto the next program. So we have a very popular business credit card program. Okay, the great thing about this program is we are getting our clients anywhere from 20 to 200,000 in these business credit cards. Okay, the great thing about the business credit card program is it does not underwrite the client from a year in business or a revenue perspective. Brett, obviously, with some of the listeners probably in your audience on Distress Pro, they may just be starting out, right, Brett?
Some are,
I know Yeah, exactly. And so the ability to access capital gets a little tough, right? Because you don't have a track record, right? You won't qualify for any revenue-based programs, right? And when a lender looks at you from a year in business perspective, you're just starting out, right? Let's say you just learned about distressed note investing and you want to get in. You see the potential with it. You see how it can, change your life and what it can do for you from a wealth building perspective. So the nice thing about the business credit card program is it only underwrites your personal credit score. Okay. And so if you've been able to maintain good credit, if you have a 680 plus score, our clients are getting qualified anywhere from 20,000 all the way up to 200,000 in these unsecured credit lines that come in the form of business credit cards. Now again, this program is a business credit card. It is not a check writing credit line, okay? And so there are mechanisms and there are ways to convert the credit line into cash. However, this program is probably not necessarily the best program for the purpose of buying the house or buying the note. You can do it through like some balance transfer checks and some of the other mechanisms, but it gets, you want to use this program for all the other types of costs that you incur in your business. So the business credit card program is phenomenal for the purpose of rehab supplies, right? Think about it. You can run down to Home Depot, Menards, Lowe's, and let's say, for example, if it's a cosmetic fix, obviously we know that some of the rehabs, they can take a lot longer, right, than 30 days, but some of the best and smartest real estate investors that I know, they'll use this program and they'll literally run to Home Depot, they'll grab the flooring, the lumber, the drywall, the paint materials, and obviously with a credit card, you only pay on that monthly, right? So the smart ones I know, they use it like free capital in the sense that they swipe the card, they buy supplies, as long as they can have that card paid off at the end of the month. Again, they're using the credit card as a tool to effectively accomplish their goal, which is to be able to obviously liquidate the home and sell it, or get it into the ability to rent it out, get cash flow coming in from it. Right. So the other major selling point, the other biggest thing about the credit card program is most of the cards come in at 0% interest for the first 6 to 13 months. Okay, after that it goes to your typical credit card rates, right? And the 0% though is great because we actually use this program more on the business financing side for clients that are stuck in higher paying loans, right? If you're paying out through like a merchant cash advance or a higher term loan product, and if you have the ability to refinance that and go down to 0%, that's a huge selling point. Another big selling point about the 0% is if you are truly a startup. Brett, you obviously know as an entrepreneur, and Tony, you guys all have run businesses, obviously. Sometimes when you start something up, it takes some time, right? It takes some time to get into cash flow. You're learning your business, or you're trying to get new clients, or, if you're in this space, you bought that distressed note and you're trying to work it out, right? And there's time, right? The nice thing about this is you're only paying that minimum payment every month, and that's a huge thing.
Can I add to that a little bit?
Yeah, go ahead, Tony.
Yeah, and also, the business credit cards, they don't report on your personal credit report. So on your personal credit. So a lot of business owners, that's actually how they start their own business, is with money they might have borrowed from friends and family, or using their own personal credit cards, which is actually a recipe for disaster. Because a lot of businesses fail, in the first year or so. So, and if they're using their personal credit cards to accomplish these things that you just mentioned, that the more they use, that drives their score down. So, yeah. This is a perfect tool for startups. Absolutely.
Yeah. Yeah, you're spot on there, Tony. The ability to not have to put because think, for everyone on this call, I want you to kind of think about this. Tony was right on with that point. If you were to take your personal credit cards and run to Home Depot and throw on 20,000, 30,000, depends, of course, how much limit you have compared to how much your balance that you're using is. But the concept is if you go and you max out those personal credit cards to be able to buy the rehab supplies, what happens if all of a sudden you have another great deal that comes onto your table? You need to go to the bank to get a mortgage on one of your other properties, and all of a sudden they can't approve you because they look at you and go, well, man, this person has bad credit. Their credit score is way down. Look how much personal debt they have. What Tony just said was right on, in the sense that by using these business credit lines, you have the ability to hide that so that you maintain your really good credit, which then allows you, if you need it, to be able to access, senior financing, or, what we call senior debt, like a mortgage on one of your rental programs. So thank you for that, Tony.
Let me ask you a quick question. If I'm sitting here in the audience and I see startups okay over here, startups has sort of different connotations to it. What do you mean by that? Let's kind of flesh that out for them a little bit. Does that mean if I incorporated my business, a couple of months ago, and I'm just getting started, is that the kind of startup that you're talking about?
Yeah, you literally with this program could form an LLC tomorrow, and you could apply for this program right now. Now the things that the lenders are going to underwrite for this program, it's all based on your personal credit score, right? And your credit report. So think about the things that you're going to look at. Another really important thing that I want to get across, you could have an 800 credit score, and you could look at this program and go, wow, 20 to 200,000 in unsecured credit lines. Oh man, I have an 800 credit score. I'm going to easily get approved for the full 200, right? That's not always the case. So for example, if you have an 800 score, but you only have $5,000 of personal credit, do you think a lender is really going to all of a sudden go, oh, well, let's just give them 100 grand or 200 grand, right? Yeah. So the things that the lenders look at for this program obviously are how much personal credit do you have, what is your utilization rate, right? How much, what is your, the amount of existing credit limits to what your current balances are, how long have those accounts been open, are there any derogative items on the report like a bankruptcy or foreclosure, are there any other late payments, right? The types of accounts that you have open are important as well. It's all the normal things that affect your credit score. But the biggest thing I just want to get across is that, having a 780 score, an 800 score, it's not necessarily going to mean that you're going to get higher limits and higher amounts. One of the biggest factors is, how much personal credit do you currently manage? And that'll make the lenders comfortable in extending out to you the business credit as well. So that's an important piece. So, cool. But does that help? Does that make sense, Brett, in regards to the startup nature of it? Again, think about it. The lenders are really underwriting the person, not the business, right? Yep. They're looking at the ability and how you manage your existing credit. And that's going to factor in the business credit. And some people, Brett, are really surprised that we can go and get clients, 30 grand, 50 grand, 100 grand, 200 grand, in these credit lines. But you have to remember there's a huge appetite for these lenders to extend capital, and they do it in such a way where, of course, they're underwriting your risk. But again, they're really betting on the borrower, right, and the track record that they have. And just if you've maintained your good personal credit, they're probably expecting you to maintain, your business credit.
Right.
Okay.
Perfect.
So again, business credit card program, probably not the best to go out and buy properties and houses. Again, you can do it. Obviously, everyone that has a credit card, I'm sure you're aware, there's balance transfer checks, which sometimes allow you to transfer cash into your account. But again, it's another step. It's a little tougher. We typically don't always recommend using the credit card program to buy an asset. We recommend it for the rehab supplies, or also it's perfect for like Tony mentioned earlier, all your marketing costs. If you need to pay GoDaddy, or if you need to pay for your email marketing service, just throw it onto the credit line. It's a great tool to be able to extend, when it is you have to make those payments. So, all right, transitioning on. So we have a very popular working term loan program. We call it our 48-hour business loan program. It typically goes from 20 to 500,000. Some of the requirements on it. We typically want to see the borrowers have a 660 plus score. They do have to be in business at least 2 years, and they do have to do a minimum of at least 100,000 of revenue. And so, again, it's a term loan product, typically 1 to 4 year terms. Think about it more like a traditional business loan, right? And so, getting $50,000, $200,000 business loan, again, is another form of capital. And if you've been rejected by your bank to get a business loan, then some of these alternative lenders will possibly are going to be a good fit. So again, a term loan. It's a loan. You get the capital advanced to you into your account. From there, you choose what you want to use. So you can use it for purchase capital. You can use it for rehab. Think about it sort of similar to I'm sure many have heard of like an SBA loan. Many businesses use, like an SBA loan.
Sure.
We have all the SBA loan programs in our platform, but, this specific program is an alternative lender that provides this program. We have a couple other fintech lenders that provide these term loans, but again, they'll have requirements. They'll be a little less stringent than a bank, and it's a good program. So transitioning now then to the next program. So these next two slides are by far our most popular programs right now. And I'm really excited to share with everybody the slide that you're seeing now. Recently, as of about 2 months ago, one of our fintech partners came out with an amazing product. And it's what we call our no credit check credit line. Okay. And some of the details on the program. The credit line goes from 1,000 to 100,000, okay? And it is a true on-call cash credit line. It is not a credit card, okay? So with a fintech lender, how it works is, those lenders typically, and obviously if they're not checking your credit, what does that mean, right? Well, there's no collateral, right? What they're underwriting is the cash flow, okay? So what this fintech lender does is they connect into your online bank statements, and they run a cash flow analysis of your business, okay? And if you see kind of the second point from the bottom, your business must do at least $25,000 of annual revenue, and you have to have been in business at least 6 months, okay? But then what happens is once you get approved for the credit line, it is a true on-call cash credit line, meaning with these fintech lenders, very similar. I think most investors listening to this presentation, they're very used to using what I call online banking, right? Whether you bank with Chase or Bank of America or any regional bank, most folks have been able to log into their online banking portal. The same concept holds true for a fintech lender. What you would do is you would log in to your fintech lender platform. Once you've been approved for 50 grand or whatever the amount is that you're approved for, then what's great about it is you click a button and it transfers cash right into your account.
Wow.
It is honestly one of the most genius programs that these fintech lenders have created, and it's a awesome program for all investors because think about this. With a true on-call cash credit line, you don't have to pay interest on it if you're not using it, right? So similar to a credit card, it just sits there, right? You don't pay on it until you actually use it. And we are having so many folks and small businesses, real estate investors applying with us right now for this program because, again, it's on-call capital, right? For small business owners, having the ability to put, with a click of a button, mind you, right? You don't have to go get underwritten again. You don't have to go through a huge loan application. Once you are approved for it, it just sits there. And the ability to click a button, get cash into your account to meet payroll this Friday, to buy inventory, to take advantage of a great contract you just got, is huge, right? It's really huge. And the same thing for real estate investors and for the folks in the distressed note space. again, we don't know when you need capital, right? Obviously, everyone's using Distress Pro and they're out there marketing, trying to find the next asset to buy from off-market channels, or they're negotiating with the banks to get that portfolio available to be sold to them. This credit line is great because, again, once you've gotten to that point, once you've negotiated the deal, you now need cash. You click the button, the cash transfers into your account, and at that point, you use it for whatever you want, right? Once the cash is in your business checking account, you're ready to check with it. You can use it to buy the asset. You can use it to, go and buy rehab supplies. You can use it to pay the landscaper, to pay the plumber, to do whatever it is that you want with it. And it's just a really great program. The other best thing about this program is the speed at which we can get our clients approved for this program. It literally, it's kind of what we call a very quick step program. We'll get you over the brochure, which again will be included in the link at the end of this presentation. And once you review the program, you feel you're a fit for it, you'll reach out to Tony. Tony will get you over the portal link. You'll link up your online bank statements to the lender's software and algorithm. They'll run the analysis. Literally within 2 to 4 hours later, you get an email saying you're approved, and you can then make a decision to activate that line, and you can use that money the next day. It is just one of the greatest programs we have on our platform, and I can't begin to say enough about it. We're very, very, very excited about it.
That is awesome. So what are you seeing on average? Someone might, they see this and say, well, yeah, 1K to 100K. Does that mean most of the time you're getting, $2,000? Or what are you seeing if you had to rough strokes on that?
Yeah, great question. So we're going to go through this program, and then we're going to go through the next program as well, because the next program is getting typically higher amounts. So This program is still in beta, Brett. This FinTech lender just came out with it, and obviously, let's just kind of put ourselves in the position of the FinTech lender, right? There's a lot of risk with this product, right? Think about it. You're not checking someone's credit. Right. You're not seeing if this person had a bankruptcy. You're not seeing if they had a foreclosure in their past, right? And they run a very large risk of somebody clicks a button and the cash transfers in the account and that person runs with it. You know what I mean? So while they they allow us to market the program up to 100,000, we're typically on this product seeing clients getting lower amounts. We're typically seeing getting them 10, 20 grand. Okay. Now, those amounts will probably be raised. That's kind of what I want to try to get across to everybody listening to this call. Of course, that lender has to see how it goes in their portfolio and such. But the idea would be if you get a line today and your revenues keep growing, there's probably a very good opportunity that this lender will begin to raise the limits. Okay. And so, again, this program is a good fit for someone who feels that getting, 10, 20, 30 grand as an on-call credit line is a big deal, right? For multi-million-dollar commercial investors, a $20,000, $50,000 line is maybe nothing that they're going to be happy over, right? That doesn't help them, right? Again, this program is going to be a great fit for small to medium-sized businesses and real estate investors who truly want that on-call mechanism via a credit line. Yeah. And to me, and Tony and our leadership team, and we've talked about this, this is just an opportunity to kind of get into their portfolio and then see how it goes. Now, everybody knows in the capital markets, things are always changing, right? And if we can kind of transition now a minute, Brett, you might have some more questions, but I want to transition to our next credit line program, which is the cash credit line program. Cool. This program goes from 20,000 to 100,000. The lender has a couple, little stricter requirements. They want to see your business doing at least 100,000 of revenue and a minimum 6. So this program does check your credit, right? So they want to see a 660 score. But about 2 weeks ago, we got an update from our vice president there, and they have been doing so well with this program. Both of these credit line programs that everybody is seeing and learning about today, they're very similar, right? Both of these lenders are competitors to each other. And what I'm trying to get across is, while the first one we just showed you, the no credit check credit line, is in beta, this lender has been doing this program a lot longer, and we just received word that they're planning on upping their limits. Now, we don't know if that means they're going to bump them up to 150, 200,000. We don't know what that means yet. But again, what that says to us, right? And Brett, this obviously with your work in the capital markets. That says that these lenders are excited and comfortable with how their portfolio is growing. Maybe they're not experiencing a lot of defaults, right? Because obviously, if there's a lot of defaults, they'll probably restrict the program, right? So that's, in regards to the no credit check credit line program, I want to get across to people that, the dollar amounts that you get approved for might be lower, but that's okay. Again, it is, it's an on-call program. There's so many benefits to it. For folks that have bad credit, that cannot go to a local bank and get any sort of credit line, that's a great solution. You know what I mean?
Oh, yeah.
So, with the second program, the cash credit line program, this is pretty much the same process. It's from a FinTech lender. They get approved in a couple hours. It's an on-call line. They go into their online banking to be able to transfer it. And again, we are typically seeing clients getting higher amounts on this one. And then also, like I mentioned, word coming down the pipeline is that they're going to be bumping up these limits, which is great. So the final thing I want to mention on both of these credit line programs from these two FinTech lenders, the exciting thing is we can actually apply the client to both of these programs simultaneously, Brett, because they don't interfere with each other from like a lien perspective.
Okay.
And so if you have a client that's listening to this call and they have a 680 plus score, they have a 700 plus score, and they do the 100,000 of revenue, the cool thing is we can actually apply the client to both of these programs, and it's a way again for them to be able to access more working capital. You see what I'm saying?
Yeah, great.
Yeah. So for sure, these programs are kind of, I think, what most all real estate investors and non-performing note investors really want. Most investors want that true, similar to at a bank, right? What we would call a revolver, right? That true revolving line of credit that you can sit and write a check from, right? Mm-hmm. Most folks want that. They want it because it's truly, they're in 100% control, right? They make the decision when they use it. They make the decision, the amount of interest they get charged on it, because they have full control. Whereas a loan, you get the, $200,000 advance to you, and then you have to pay the monthly term and repayment back, right?
Yep.
With this, it's, the true, it's a true, credit line. And again, that's why these FinTech lenders have come out with these programs, is because they see a need in the marketplace that the banks are not servicing. And so they want to develop this program to be able to service the needs of these small business owners and these real estate investors, to be able to, give them a product like this to be able to help them grow their business.
Cool.
Okay. So transitioning now into the final program. This final program is going to be more for the folks on the call that are actually acquiring commercial non-performing notes. Okay. So we, while I mentioned earlier in the call, we don't have a lot of lenders that want to just straight up do the one-off residential non-performing note purchase. We do have a couple lenders that they love financing commercial non-performing notes. Okay, they built a pretty large portfolio with it. And so again, if you look at some of these criterion of what they're looking for, they're going to de-leverage their risk, right? So they're not going to lend at the normal 70, 80%, right? Like you would see if somebody was buying the actual property, right? Or the asset itself. And they're going to limit it to more either the 50% of the purchase price or 50% of the current market value of the collateral. And again, just think about why they're doing that, right? They're reducing their risk. They're making sure that the borrower has, some skin in the game. But again, if a investor on this call is looking at the difference between putting 100% of their cash to buy one commercial non-performing note versus the ability to, maybe buy two, right? By putting half of it down, that's a great value proposition, right? So, obviously then you can look at, some of the amortization on that program. We have kind of a breakdown as well, Brett, that we can get out to everybody that kind of, goes through some more of the nitty gritty, you know what I mean, of the matrix itself. But it's a good program, interest only, covers majority of the asset class types. I'm pretty sure it covers all of them. I think it might not cover hospitality assets. We'd have to look into that. But again, just the ability to not have to use 100% of your liquid cash, but cut that in half by potentially getting leverage, while you work out that asset, right?
Absolutely.
It allows you to grow your portfolio faster. So.
Yeah, and there's so many opportunities out there in on the commercial side. It's where the most of my experience has been on the commercial side, not on the residential side. And a product like this is perfect.
Yeah. Yep. Absolutely. So anyway, that's it. That's the majority of the programs that we have on our platform that can help the folks on Distress Pro to be able to grow their business. Again, capital is just a tool, guys. Who's ever listening, on this call, I've obviously running a private equity firm, have learned the importance of all these different tools and how they can help us accomplish our goals on the acquisition side, right? And so hopefully today through this presentation, we've been able to kind of highlight and outline, number one, the programs that are available to folks, depending on the different financing variables, their credit, their cash flow, their collateral. And then second, how it is that you can use these programs to benefit your business, right? There's a lot of opportunity, guys, in the distressed debt space. Again, for somebody that's worked on kind of both sides of the bank, highly recommend the distressed side. Just awesome opportunities. So really encourage everybody to go to distresspro.com/borrow. We've provided Brett all of our marketing brochures for the programs that I've covered today. And we also have, a lot of other programs on there as well. We cover obviously commercial real estate financing, corporate finance, small business, and then equipment financing. And so, Brett has a lot of those other programs as well that, anybody that's interested can check out. But Brett, we really appreciate you giving us the opportunity to walk everybody through these programs. It's been an honor to be your client, to use Distress Pro. Again, I think it's a fantastic solution, and I appreciate our business relationship together and look forward to many more years doing business together.
Same here, Kurt. And I really appreciate you taking all this time to kind of walk through here. As sort of in it as I've been for all these years, I still haven't seen a lot of this kind of product available. And so, kind of opened my eyes to a lot of things. Now, if you're sitting here and you've just been through this, that this is a streaming web class that we've got here. And so what happens is that things can change from time to time. And so if you go to distresspro.com/borrow, what we're going to do is make sure that we keep that completely up to date so that you are always going to, be able to get info on whatever the best programs are that are available for you and your particular situation today. And so I know that for a lot of this, what we went through today was sort of overviews of the programs and where you can use them and some of the qualifications. And you might have some questions about what that would look like for you specifically in your specific case. And again, you go to distresspro.com/borrow, and what we're going to do there is we're going to give you all of the nitty gritty that you need so you can really kind of look through there. But then we're also going to help connect you to Tony so that Tony can chat with you and really counsel you on what else might be available for you in your particular situation, because everybody's got their own place where they're at right now. And so obviously there's no one size fits all. So the best thing, if you think that any of these might be appropriate for you and you're excited about it, go to distresspro.com/borrow. We'll get you all the details. We'll get you in touch with Tony, and then it's low pressure. If it works for you and there's something that's going to work, he's going to help counsel you through it. And if not, we're going to tell you that, maybe this isn't the best or the right time for you, right?
Yeah, absolutely. And I think that piece that you just hit on, Brett, is so important. In the financing space, there's a lot of folks listening to this call that, like you mentioned, Brett, maybe are just starting out, right? Or maybe they've been doing this for a little bit, or maybe they're masters, maybe they're running their own fund.
Or
right?
maybe they own a different kind of business altogether and they're looking to move into this one. Yeah.
Yeah, exactly. And so my whole message for any client coming in through our doors is, we know our business well. We know these programs like the back of our hands, right? Let us help you run your business, but not have to make you a master of finance, right? Yeah. Financing can be confusing. It can be stressful. It can be a headache, right? The great news is by doing that quick, 20-minute call with Tony, all of our directors are trained on what we call our debt discovery process, where we're going to walk through and we're going to identify all those key components that our lenders care about. Then again, instead of you having to go search out or figure out if you qualify for it, Tony very quickly and efficiently is going to be able to identify which of the programs that you are going to be a fit for. And then the beautiful thing that I try to get across to all entrepreneurs or investors as well, even if your credit score is low today, or haven't been in business for 6 months or whatever it is, that's okay. The great news is you can put a credit restoration plan in place. You can put a property improvement plan in place. You could put a business restructure plan in place. And even if you don't qualify today for one of these programs, it doesn't mean that you can't put yourself onto a path by taking some necessary steps to be able to achieve and get these products in the future. So again, to save, I know everybody on this call is busy. I'm a busy CEO. Brett, you're a busy CEO. The ability to access working capital doesn't need to be hard. Just get on the phone with Tony. Let Tony walk you through, what's available. From a preparation perspective, Brett, typically the items that we need, if everybody can maybe grab a pen or paper, typically before talking to Tony, it would be very well worth it to have these items ready to go, because at the end of the day, we're going to, depending on which product it is, we're going to need to have these documents available. Okay, and again, some of our programs don't require them, some of them do, but a full package for us typically is comprised of last 2-year tax returns, last 6 months bank statements, copy of your credit report. We highly recommend just go to creditchecktotal.com. That's creditchecktotal.com. For $1, you can access one of your tri-merge credit reports and download that. That'll show us, obviously what your credit score is. And then obviously, if you're looking to purchase a property, having a breakdown of the address and any sort of recent appraisals is very important. So if everybody can kind of begin to assemble those pieces of documentation, that'll greatly help. Again, do all the programs require a full package like that? Absolutely not, right? Like we mentioned with the no credit check credit line, all you're going to do with that is fill out the information on the portal, connect your bank accounts, and they'll run the analysis, right? But again, to help Tony be more effective for you, those are some of the documentation items that we would just recommend that you have to kind of help us go through that debt discovery process.
Yeah.
Sound good, Brett?
Yep. Awesome. So really appreciate you coming on. Again, if you have any questions about like the details of this, or if we've got any incentives going in terms of like closing cost rebates or any of those kinds of things, if any of that's happening, distresspro.com/borrow is where we're going to give you all the details, and then give you a way for you to take the next step if you think you want to apply for any of this.
Perfect.
All right.
Awesome. Really appreciate the opportunity, and have a great day.
My pleasure. Thanks, guys.